All right, hope everybody is doing well. Today we're going to be going through the prospectus for the $1 billion bond. So they're seeking to raise up to $1.5 billion, and we'll go through the prospectus just to understand the offer a little bit more. So we'll go through all the details, help you to understand some of the key terms and dates about this offer, so you can make an informed investment decision, right? So that's what we do here at Learn, Grow, Invest. We help you to understand investing, help you to make investment decisions for yourself. So that's what we're going to do here. This is just for educational purposes. We're not here to tell you what to buy. We're here to teach you to determine for yourself, right? So we're going to go through the details here. Before I jump into that, I do want to invite you to join our investment community. The barcode is there. The link is also in the description of this video. If you want to learn how to invest, understand investing a little bit better, be a part of a community that talks about investing and to help you to understand the basics and get started, feel free to join. We meet once per month to discuss topics like the one we're going to be talking about today. You're also welcome to join our Portfolio Makeover Challenge. We have one every few months. You're more than welcome to sign up for the next one. It's coming up in about 30 days. And it's something that we do often just to help you to understand how to grow your portfolio, strategies on how to assess it, right? You may not know which stocks to keep, which stocks to sell. So we help to train you on how to do that for yourself. We give you a process on how to pick stocks, how to rebalance your portfolio in the right way, when to buy, when to sell. And of course, we'll do live portfolio reviews, going through the concepts that would have taught through the 3 days. So feel free to sign up now, and I'll see you in the next one. So let's go through the details for this offer. So the company here in question is Dolla Financial Services. And at the point of this video, on the last trading day, it traded at $2.50, up 0.81% from the day before. It's been listed on the Jamaica Stock Exchange for a few years now. It's in the microfinance space. And so we've featured Dolla Financial Services a lot over the last few years. So it's a company that we're quite familiar with here at Learn, Grow, Invest. And so if you have any questions about what they do, how they provide their products and services to clients, feel free to just search for Dolla Financial Services here on this channel, and you'll find some more details about them. For the purposes of this video, I'll just be going through the offer. So just some of the high-level details before I get into the meat of the prospectus. We are going to be going through the prospectus in detail during this video, but I just want to give you this just in case you only have a few minutes and you want to, to leave the video early. So they have two key tranches here, 500 million at 11% for 3 years, and 500 million at 12% for 5 years, right? So that's how long the bond will take each tranche will take to mature. One is 3 years, one is 5 years. There is an option to upsize for an additional 500 million. We'll see if it provides any details as to which tranche that may be allocated to in the prospectus. The minimum that you can subscribe with is 20,000 Jamaican dollars, and in increments of $10,000. Interest payments will be made quarterly. So how it works, the amount of interest that you are being offered per annum will be split in 4 and paid quarterly, right? What we also need to determine is whether or not taxes will be taken out of that. So we look to see if the prospectus gives us any detail about that, but it's common that GCT is taken out of the interest payments for bonds. So I'll try to confirm that. If not, we can ask the team, and then we can just update you here on this channel. And then, of course, they're using as security fixed and floating charge over their assets, right? So that's what they're using to secure the bond. They stated some financial covenants. Now, I just did a quick search to see what some of these means. So I'm going to explain them on the next slide. So they mentioned a few things, right? So max leverage ratio of 4.5 times, minimum interest coverage of 1.5 times, and a max net debt to equity ratio of 4.0 times. So let's see what those mean, right? So leverage ratio of 4.5 times means that Dolla cannot borrow in excess of 4.5 times its earnings to ensure that it doesn't become over leveraged. Why is this important? It's going to help to give you peace of mind as the bondholder that they won't go past a certain point in terms of how much they're borrowing. So it's something to monitor during the duration of the bond to see how they are tracking within this ratio. Next one is interest coverage. It means their profit must be at least 1.5 times its annual interest payments. And this is to ensure that they have enough money to pay your interest payments in terms of a bond holder. And the third one here is maximum debt to equity ratio of 4.0 times, means they must balance. Essentially, they're going to be juggling the amount of money they borrow and the shareholders' equity, right? So these are key numbers that you want to monitor if you decide to purchase this bond, to see if they're able to, keep these covenants that they have committed to here. All right. So I'm gonna switch over to the prospectus now. We're gonna go through as much as we can within the hour, and then we'll take any questions that you have, maybe around the 45-minute mark. All right. So let's go right into it. So Prospectus was released, well, it's dated here October 7th. It was released a couple of days ago, and we see the key details here, right? So same thing that we mentioned here before, tranche 1, 500 million, 11% for 3 years, and tranche 2, 12%, 5 years. We mentioned the financial covenants already, and it says here collateral, the company's obligation to pay will be secured by a debenture creating a fixed and floating charge over all the assets of the company. All right. So it says here, same details that we had before, 1 billion seeking to raise with an option to upsize. All right. So we'll go through the details here as much as we can. Or we'll try not to skip over anything that we think is important, but it's 172 pages. I don't think we're going to go through every single page, but we're going to try to go through as much as we can, right? So it says invitation is made to Jamaican residents in Jamaica. So that is important to note. So if you're watching this and you're overseas, it's not to be construed as an invitation to any person outside of Jamaica to subscribe or apply to purchase interest in secured bonds, all right? So that's something important to note. Those are just terms that I really do recommend you read if you're not familiar with what they say. This is a summary of the invitation. I'll focus on the things that we have not touched on before. So the issue price says here 100% of principal face value. Minimum subscription, we mentioned that before. So we're looking at 20,000 with increments of 10,000. The interest will be calculated and accrued from day to day, after as well as before any judgment, but prorated on the basis of a 360-day year and paid quarterly on each interest payment date. The first payment date will be December 30th. So essentially, think of once this offer closes, if it closes successfully, the first payment would be made December 30th, 2025, right? So you'd get, I'm imagining you'd get 25, you'd get a quarter payment, right? Out of what the full year's payment would be, if I'm not mistaken. That's how I would expect it to be here. Interest will begin to accrue from the day the applicant receives an allocation certificate or other written confirmation of the commencement of accrual of interest, right? Whichever is earlier. So that's something important to note there. It says here, interest will be due and payable on December 30th, March 30th, June 30th, and September 30th in each year. Save and accept that the first interest payment date shall be December 30th, 2025, and the final interest payment shall be also the maturity date, right? Again, this is just important dates for you to bear in mind. So the maturity date for the two tranches will be separate. Tranche 1, the business day falling 3 years after the issue date. Tranche 2, the business date falling 5 years after the issue date. We spoke about the security already. Spoke about the covenants already. Let's talk about early redemption here. It says after the first 12 months, the company may voluntarily prepay any tranche of the secured bond or redeem at par all or some only of the secured bonds in issue without premium or penalty on any interest payment. This is important, right? So they're saying after the first 12 months, they have the opportunity to voluntarily give you back your money, right? Without any penalty or any interest. That's what it's saying here. So that's something that you have to bear in mind. It may not go the full 3 years is what it's saying here. Principal along with accrued interest will be due and payable on the relevant maturity date without a prepayment penalty or early redemption fee on the date, right? So these are terms that they are telling you that they have the opportunity to move within, and you have to, when you participate, you are accepting these terms, right? So use of proceeds, very important for us to glean here. So one is going to grow its loan portfolio, and two, it's going to repay certain indebtedness. I'm assuming they'll tell us which debts they're going to repay with it, including approximately 570 million due October 2025, right? So I don't remember who that debt is for, but that 570 million, they're going to use part of the proceeds to repay that, which means that debt comes off the books and the bond will go on, and then they'll use the balance to grow their loan portfolio. All right, the company also intends to pay expenses associated with the invitation out of the proceeds, which it estimates will not exceed 30 million. There's always a cost for the offer, so that's something that's normal, all right? In event of default, that's set out in 6.9, so we'll get there at some point. So it says here, interest payments to Jamaican resident bondholders will be subject to tax at 25%, right? So this is something that you definitely want to bear in mind. Your interest payments are going to be taxed at 25%. So what that means is that if you have 100,000 and you're getting 11%, you're going to pay 25% of that 11% in tax, right? That's something that you have to bear in mind here. So you have to do that calculation to see if it makes sense for you, right? Such interest will be withheld by the registrar and paying agent and paid to the relevant tax authority. A certificate in the usual form confirming payment of such tax will be issued to the relevant bondholder by the registrar and paying agent, right? So let me help those who I'm hearing say, Jermaine, I don't know math, help me with this, right? If I put in 100,000, we're gonna do two of them, right? We're gonna do 100,000 and a million. So if you do the tranche that pays you 11%, right? So it'll be 11,000, and then you pretty much divide this. You can divide it by 4. You're gonna pay 2,750 in taxes, and then that amount is gonna be split out, right? This may not have been the cleanest calculation here, but this amount is gonna come out in taxes, and then the balance of that you can essentially know that it's gonna be split out over those 4 payments, right? So let me just complete this for you, right? So 11,000 minus 2,750. That's 8,250 divided by 4. So you're gonna get payments of $2,062.50 each quarter for a year, right? Hopefully that makes sense, right? Right? So that is what you're gonna get. And if it's $1 million, you pretty much move this up to 20,000, right? So if it's $1 million, we get about 20,650 per quarter. All right, hopefully that makes sense for you. We'll try and do a video just on the calculation as well, so you understand it a little bit better. I think that's it, right? Listing, the company will apply to the JSE to list the secure bonds on the bond market platform of the JSE. This is not a guarantee that the application will be successful. Why this is important is if the bond is listed, then you may be able to trade these bonds, which means if you own shares in the bond, you may be able to sell them earlier than the maturity date. And if you're interested in purchasing, you may be able to purchase them on the market, or if you own them, you may be able to sell it, right? That's what that means. There's a processing fee for the application for $172.50. It's a flat fee. So once you're making an application, if you go with the minimum 20,000, you have to pay $20,172.50 for your overall application. All right. Here are some key dates to note here. I'm zooming in a little bit here so that you see this better. So opening date is the 23rd of October, which is 5 days from now. The closing date will be November 13th, and the company has the right to shorten or extend the subscription period in the circumstances set out, right? So they would have stated the terms under which they may extend. So usual reasons for extension is if they think they need more time to get those funds in. It may also close early if they feel like they're able to get it oversubscribed in a shorter time. All right. So these are ways that you can pay for the offer. So you can pay via manager's check, cleared funds. I think this here is standard, but if you're interested in making payments to the different options, just you be sure to check out this section and see which one makes sense for you. All right. Basis of allotment here, if any of the tranches is oversubscribed after the exercise of the option to upsize, it is likely that the secured bonds in that tranche will be allocated on a pro rata basis. We see this for IPOs as well, in which event the applicants may be allotted fewer secured bonds than were the subject of their applications. Pretty much saying, let's say they get 2 billion, then it's possible that you may not get everything that you've applied for. That's quite normal, right? So you just have to see, it really comes down to the amount. Usually the persons who order the lower amounts have a higher likelihood of getting their bonds than those who have the larger amounts. All right. Confirmation of the allotment will be within 6 days after the closing date. All right. And then your refunds, if applicable, would be 10 days after the closing date. Okay. All right. Let me see if there are any questions so far. I think we've been good so far. I'm just looking at the chat to see if there are any questions. Hopefully that math didn't throw off anybody. All right. Letter from the chairman. Let's see what they have to say. I'll just go straight to the meat of it, right? This year was defined by record loan portfolio expansion, a landmark bond raise, and sustained demand for lending solutions across local and regional markets. For the year, loans outstanding, net of expected credit losses, rose to 4.0 billion, an increase in 1.5 billion, or 63% year-over-year. This exceptional growth was fueled by elevated disbursements, with the most significant surge in the latter part of Q4 2024, funded in large part from the debt raise described below. Right, since 2018, your net loan portfolio has delivered a remarkable compound annual growth of 79%. Right, they've really grown their loan book quite impressively, I'd say. So the landmark bond raise that you're referring to here is that a key highlight of the year was the successful $1.6 billion secure, 1.65 billion secured corporate notes by way of exempt distribution arranged and brokered by Mayberry Investments, initially targeted at $1 billion. The issue was upsized due to the overwhelming demand from accredited investors, right? So that's something that they would have done already. And of course, just some other details about them here. I'll skip that. In 2024, they dispersed 2.4 billion in loans. We cover some of these details in the earnings calls that we do with them. So again, you can look at more of the business details there. All right. So I think we can skip that as well. Definitions here. Let me see if there's anything worth dwelling on. I really do work. If it's your first time participating in a bond, you certainly want to read these through carefully, right? So they're explaining interest coverage ratio there, interest payment, insolvency events, things like that. NPL, non-performing loans. Okay, all right, forward-looking statements. These are standard here. You really want to read through these. Let me see if I can skip this a little bit faster. We spoke about use of proceeds already. I'm gonna skip these, right? Anything that I covered already, I'm gonna skip. Spoke about the covenants already. I may do a separate video on the covenants just in case there's anything that needs clarity. I'm gonna read it through again and see if there's anything. Let me see what it says here. If events of default, right? The following is a summary of the events of default, which would allow the security trustee on behalf of the bondholders to demand immediate payment of all principal and interest. So this is gonna be important to note. 1, default by the company in paying any sum due under the secured bonds for a period of 5 business days, or do you read here or here? I'm thinking it's here. Yeah, I think so. Any representation or warranty made by the company and trustee being incorrect in any material respects when made, and the company either knew or ought reasonably to have known it was incorrect, or default by the company in the performance or observance of any covenant, right? Which is why I need to track the covenants carefully. Condition or any other provision in the trust deed, including the financial covenants, or if any order is made or resolution passed for the company to be wound up, except a voluntary winding up previously approved by the company, or if an encumbrance, or I've never seen that word before, shall take possession of, or a receiver is appointed over all or any part of the company's assets and the security trust. I mean, all of these things may be a little too technical for some of you as first timers, but it's pretty much saying here that if pretty much the company gets in a position where they can't honor its commitments, make payments, it's in default by any other terms, and so there may be a call on their assets that may lead to event of default, right? This says if there are any distress or execution is levied against a company and the security trustee certifies that that in its opinion such action is materially prejudicial to the interest of the bondholders, right? So if the company is in distress, they may say, make a judgment call and say that it's in your best interest to do certain things. If the company stops or threatens to stop payments of its debt, or shall seize or threaten to seize, to carry on the whole or substantially the whole of its business, and the security trustee certifies that in its opinion, right? So all of these things, right? I would say read it through. If you don't understand, ask your financial advisor. But I mean, these are things that, again, you just want, if you have your funds in a company that you're getting quarterly payments from, you want to read every financial statement, go through the quarterly reports, check in on the health of the company, those payments. If they stop for any reason, you want to raise your hand, find out what's happening. One of the things I will say here that I'm personally concerned about bonds that are done for companies that aren't listed. Because this is a listed company, you have the opportunity to learn about the company every quarter. For a company that's not listed, you wouldn't have the same visibility, right? So that's just something to note here, that you do have the opportunity to keep track as to whether or not the company is able to honor its commitment. Take that opportunity and read through the statements each quarter to understand where the company is. All right. So I'd say read through that. So be sure you're comfortable with the terms under which they may default. Let me see here. Try not to get into the technical talk here. Keep it simple for you guys, right? This is information about the company now. So the company has two subsidiaries. There's Ultra Financier Limited and Dolla Guyana Inc. I think Dolla Guyana has been wound up or is in the process of being wound up, if I'm not mistaken. Yes, wind down, sorry, the operations of Dolla Guyana Inc. These are their locations, 11 branches across Jamaica. These are their loan products. I mean, it's all loans, right? So the product name is not necessarily important here for the purposes of what we're doing. It's a loan, right? All right, these are its top 10 shareholders, Wide Base, Dequity, Supreme Ventures, Mayberry, Premier Private Equity, FRPE, I think this is First Rock, PWL, I don't remember who that is, and some other names here, all right? Charges against the company. This is JCD Trustees Limited. This is 1.1 billion. DBJ is 100 million. JCSD Trustees 1.6 billion, and Mayberry 379 million, all right? I think this is the one they're going to be repaying. This is 379. So this may be one of them being repaid, all right? These are their properties, material contracts. We read these already. Litigation. All right, so at the date of this prospectus, Dolla is party to 2 civil matters before the Supreme Court, both of which were initiated by Dolla against borrowers in default, right? These matters relate to the recovery of outstanding loan amounts and or damages for breach of contract and unjust enrichment. They are considered routine and arise in normal and ordinary course of business for a lending institution, as borrowers may default from time to time. So the first claim here is against Ian Richard Andrew Anderson of Solstice Global Solutions Limited for 3.688 million. That looks like it's probably an ultra loan, I'm not sure. And then another one, which is Roger Da Costa Evans for 3.39 million, right? So they're seeking to recover those funds. I think this is the one that they raised previously. This was a private one, I believe. And this is the one due to Mayberry that I think they're going to repay, all right? Dividend policy, boy, I don't know. I'm interested to see if they're able to pay a dividend now that they're paying the bond, but let's see, all right? This would be a great question to ask for the earnings call, right? How do they see them being able to pay a dividend consistently now that they do have the interest payments? So that's something to look for there. So if the company's ordinary shares are admitted, the directors intend to pursue a dividend policy that projects an annual dividend of up to 50% net profits available for distribution. But it's not that they can't pay a dividend, right? Because you pay bondholders first, and then whatever you have, because the bondholders are paid through interest payments, and then net profit can still be distributed by dividends, right? And I think their dividend yield was somewhere between 1 to 2%, if I'm not mistaken, right? So there's that. Material indebtedness, I think we covered this. Maturity date, 570. Is this the one? Guys, is this the one that they're saying that they're gonna repay? If I thought it was the one to Mayberry for the 379, but I'm seeing 570 here, and I think they said 570. So this looks like it. Due 2025. Okay, so I think this is it, right? Because this is either April 10th or October 4. I can never tell redates sometimes, right? But it says due 2025. So I'm thinking that may be the case. That it may be these two that they're repaying. All right, board of directors, we can skip through that. This is something that you can certainly go through, and you want to know who is leading the company that you are putting your money into. So feel free to go through that. All right, the last part we'll probably spend time on is the MD&A. Let me pause and take some of your questions first, just in case. I don't want to get too far and miss anything here. All right. How lucrative is bond trading? I'm the wrong person to ask. I don't know. The bonds that I've seen listed, the trading activity is minimal at best. I don't think you buy a bond to trade it, though, is what I'd say. What is the projected inflation rate over the next 3 years in Jamaica? I do not know. That's something to maybe check. BOJ, PIOJ, maybe find that out. You certainly want to find that out before you decide here. Any concerns about their LPL issues in terms of it affecting their ability to repay the bond? I would say no, meaning NPL is a part of doing business, right? I think that that's just the type of business they're in. I think they have enough margins to repay. It's just something that you have to track, right? Bond interest 12% subject to 25%, which equates to 9% payout quarterly, right? Blessings on Saturday night. It is no. So the 12% is per annum. Per annum, right? 12% is per annum, right? They're certainly not going to pay you 36% per year. If they were doing that, I mean, I may just switch all my portfolio to bonds, right? Chairman, you're paid quarterly, but the 9% would be annual. I think you're kind of correcting him. Okay, thank you, sir. They're doing the bond to repay. Okay. Thank you all. All right, cool. So let me just check on something here. Let me see if there are any questions over Instagram. All right, hope everybody is doing good. All right. Okay. All right, thank you. I don't like to make mistakes on stream. I like when you guys correct me. Projected inflation for 2026 is 5.3%. Again, though, I would say if you're gonna be leaving your money in the bank, even if say if inflation is 5.3 and you're getting effectively 9% per year, you're still getting 3.7% more than you're getting. I don't know if you guys saw something recently that was sent out about the interest rates that you get for the bank. I didn't see any of them greater than 1%, right? So there are persons, I think I saw last year, there was over maybe 54 billion sitting in bank accounts, right? So there's more than enough to take up this offer, and those persons who want to be extremely conservative, don't want to be in securities like stocks and want something guaranteed. Not the best word. They want something a little less risky. Not the best word. I mean, every investment have risk, but they want something that has fixed payment. Let me say it that way, fixed payment, right? I think the word you're looking for is Ponzi scheme, and certainly we don't want to be using that phrase here for a legitimate company. That wouldn't be appropriate here. All right, so let's go through the MD&A. The MD&A, I think, is the last thing that we'll go through, maybe the risks. Still trying to finish this within the hour, all right? So Dolla is duly licensed by the BOJ as a microcredit institution. They are similar to a bank in that the majority of its profits are earned from the spread between the funds it borrows and the funds it loans to its customers. However, unlike a licensed deposit-taking institution, they do not take deposits from the public to make loans or to grow its loan portfolio. Instead, it depends largely on its ability to raise funds from the capital markets, like what's in this offer. I love this explanation. This is perfect. All right, so the funding sources are profits from its operations and investor capital, right? I like that as well. Dolla may from time to time raise additional capital from investors to continue to grow its loan book and thereby increase the profitability of the business. I may skip over some of these, by the way. All right, so total income of approximately 994 million. Profit before tax of 252 million and non-performing loans 12.8% and expected credit losses of 3.5%. So I would watch this and how this progresses. I think the industry is somewhere between 10 to 15%. I think they're still within that. Certainly they had it below double digits for a number of years, but as their portfolio grows, it's logical to think that that number may sometimes go over double digits. I think that's reasonable here. For the calendar year, the forecast demand for its loan products will exceed the profits from its operations. Additionally, they have a $574 million loan maturing in October, which it desires to refinance. Accordingly, Dolla Group has determined that it needs to raise approximately $1 billion through this invitation to ensure that it can continue growing its loan book and increasing the profitability of the business. All right. So from June 30th, these are the details here. Profit before tax of 132 million compared to 151, so that was down. Total operating income 114 million or 30% to 492 million when compared to the 378 for the corresponding. I think this was the big they had a loss that they had to a major, they had, I think, fraudulent activity that would have impacted, I think, their numbers for the quarter. Net interest income. So I would recommend that you watch that earnings call that we did with them for Q2. It'll be very important to watch that earnings call. It's over on our other YouTube channel. So the Investor Relations Curated channel, that's the one that you watch the earnings calls on. We don't do earnings calls on this main channel anymore. We have another channel for that. All right. Okay, this is it. So a portion of the increase in expenses for the first half of the year was attributed to fraudulent activity that resulted to impaired loan security documentation, which impacted approximately 170 million of the company's loan portfolio. The incidents were primarily linked to irregularities in loan security documentation, an issue that has been recently affected several security institutions within the Jamaica financial sector. This resulted in a higher bad debt write-offs and provisions for the expected credit losses. Well, now we see the amount here, right? I don't think this was explicitly stated before. And again, this is kind of normal. I've seen where when the thing just comes out, you don't really get all the details, and later on you see the details, and I guess after the main impact of it has not as kind of gone down, or the main reaction of it, I'd say, because I don't think it was explicitly stated as 170 million before, to my knowledge. But I may watch over that earnings call to confirm. Management immediately launched a comprehensive investigation, including a detailed root cause analysis, and has since strengthened internal controls. They did mention this on the earnings calls. And I mean, we see this for institutions, right? 170 million is a big thing. But this is, the more these things happen, the more stringent the controls. Sometimes the more stringent the controls, it can impact a lot of things for the business. Costs may increase as you try to secure the business. The process of onboarding the client may have a little bit more touch points to ensure that fraud is being managed. And then it's something that is again, maybe cost of doing business, right? As you grow, you deal with these kind of things. Remedial measures have been implemented and tested to confirm their effectiveness. Investigations into the fraudulent activities are ongoing, and the company is pursuing all available avenues to recover amounts lost, right? So what I like about what they did, they pretty much, I believe, just wrote off the amount, which is, I think, the right thing to do. And then as you try to recover that, if they do recover, it's added back in terms of amounts recovered, right? So summary of financial position and assets, right? Total assets, total liabilities. I'll skip over that for now. These are the 5-year financial highlights. So I would focus on total income here, just so you see that from 2020, 253 million up to 1.5 billion. I think this is saying for last year. Yeah, this is in millions. So that's certainly great growth. Net interest income has grown as well. I'm more interested in, I'm just going to look at the graphs here and focus on the outlook, right? Operating expenses have also grown. Again, as your company grows, expenses will grow as well. So 760 million as at last year. Profit before tax has grown as well from 18 million all the way to 478 for 2024. That's certainly significant. That's considerable growth. Loan portfolio growth, 325 million to 3.9 billion. That's considerable growth as well. Non-performing loans, performing is spelled incorrectly here. Loans to gross loans. I guess these in millions, 6 million to 9 million. Is that how I'm to read this? Because it says in millions, so I'm assuming that these are millions here. I don't think they've ever shown this graph before. I may be wrong. Maybe I missed it. Expected credit losses. Let me see what's over here. Loan portfolio. Let me go through the risk factors here. Operating expenses, and this is showing operating expenses. What's this? I'm not clear as to what they're showing here. Yeah, this part is not clear. The legend for this is not clear. Shareholders' equity on that side. All right, so you should be aware that there's a risk with every investment. So I'd recommend you go through these things. All right, we spoke about the early redemption already. Macroeconomic policies can impact the company. Global recession could impact the entire country. Credit risk of the loan portfolio, we've seen that there is risk here, right? The company is giving out a loan for, I believe most of their portfolio is secured, but it still takes time if the customer defaults. Customer default or death, again, a part of the business. Susceptibility to fraud and fraud risk management, we touched on a recent fraud activity for them. They are in a competitive industry here. Operational risk. So the company operates in several regions of the island which are considered high risk from a money laundering perspective. Although the company submits all of its borrowers to KYC requirements, of course, we don't know how those things will always, stand up to the scrutiny. Default or insolvency of an employer. If they do loan to an employer of a company and the company defaults or becomes insolvent, that's certainly a risk there. Risk in relation to future acquisitions, risk of hurricane, fraud, acts of God. So I think those things are good to go through. Let me see here. I believe we can skip the rest. So I would go through their numbers. That's what I would do. Do I have time? I may have to do that in another video. I don't think I have time to go through it here. All right, so let me see if you have any other questions. Because I mean, the offer is pretty straightforward. I think, let me go back to that slide. Just sum up the offer for those who might have missed it. So the offer is this, right? There are two tranches, 500 million tranche one, 11% per annum. And we did the calculation, right? So the interest payments are subjected to 25% taxes. So you have to essentially deduct 25% of that 11% and split those payments in 4 throughout the year. And then same for tranche 2, 12% per annum for 5 years. The option is there to upsize an additional 500 million. Minimum subscription of $20,000 with increments of 10,000. Interests are paid quarterly, March, June, September, December, and the first payment will be December 30th, 2025. All right. All right, let's see what your questions are so we can wrap up this video. The banks don't share profits with account holders, only shareholders. Hey, good night. I know Dolla is the topic, but can you shed some light on the Trans Jamaica 8.0% shares about the recent release about redemption? I cannot touch on that in this video. I want to keep time as short as possible, but I'm going to be doing another video soon. I'll try to touch on it then for you. All right, just cool. Post the question in the community and I'll just respond to it there. Supervillain is saying that they would rather buy into a bond fund. I actually wouldn't. How would the bond fund be better for you? Because a bond fund is a pool of bonds with varying interest rates. So probably the average of that return is going to be lower than you getting 11 to 12% per annum. I would think about that if I were you. All right. Any questions from anyone before I close this off? Let me know, please. Any questions relating to the offer? All right. Let me do it that way. If not, I will wrap up this video here. I would really recommend that you watch the Dollar Financial earnings call for Q2, understand where the company is before you make a final decision. So yeah, let me close this off. All right, so I think that is it. I'm not seeing any other questions. Let me check on Instagram here. All right, persons over Instagram, thank you for joining us. I see some familiar faces here. Did I miss any questions? Let me know. All right, give me some feedback. All right, 63 persons here. Give me some feedback. Is this an offer you're interested in? Yes or no? Tell me yes or no in the chat. Is this an offer you're interested in? Let me just get a pulse from who is here. Yes or no? Don't have the kind of funds to invest in bonds for it to make sense. How much funds do you need to invest in bonds, Orville? Let me know. What's the minimum amount for you to invest in bonds? I know persons who are investing in bonds with $20,000, $50,000, $100,000. There seems to be a trend among companies to borrow to pay off outstanding loans. So what's your issue with that, Ashton? What's the issue there? Because I want you to look at it this way, right? So a company have $570 million in debt to pay. What do you recommend? They take up that cash and pay it and be without that 570 million to now lend to somebody who comes through the door? I think for a lending company, it makes sense, right? For any other company, you may say, well, it's better to pay down the debt, but their business, their capital, their product is money to lend. So in their case, it makes sense to refinance instead of losing that 570 million, that ability to lend, right? So to me, that makes sense, right? Especially if they're refinancing it at a lower interest rate, right? If it's not a lower interest rate, they may not have a choice based on what the market is there, but so Orville said no, Karine said no, Levine says coupon rate looks good, but I don't do bonds. Orville said 50. So Orville, you don't reach 50 mil yet. Orville, I know you're rich, you know. Orville, you must have 50 mil by now, Orville. Same sentiment. Okay. Kurt Gibson said it's a good bond, interest is high. It's one of the highest. That is the kicker, right? The 25% tax. I wish we would change the legislation on that, because if it was 15%, that'd be the same as dividends, right? Because dividends are taxed too, right? That's the thing to note, right? So dividends are taxed, bonds are taxed, but the 25% is certainly higher, right? No, so are you lending me the money, Orville? Because I know how you roll, you know. All right. Okay, cool. All right, everyone. I hope everybody has a good weekend. I feel like going live in the community. So join us on Kajabi. I'm going to go live in Kajabi in Act 4 just for a few minutes to wrap up and see if there are any other questions. I do want to keep this live less than an hour though. So I'm going to go live in Kajabi. You're free to join me over there. I'm just going to go live for a few minutes there, right? The bond is better than an APO. At least the bond investors can get some regular dividends, interest, and the stock doesn't get diluted in the process. It should be 15%. Government didn't put money in my pocket, but takes a quarter. All right. I'm not trolling Orville. I'm going live over the community right now. So the link is in the description over on YouTube. I'm going live over Kajabi right now. All right. So I'll see you over there. Thanks everyone for joining me on a random Saturday night. I'll see you over in the community. All right.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.